Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and we've got even more adoption. Seem to be putting in one of these every day or two, so this is really good to see. Swiss watchmaker Hublot now accepts Bitcoin. Lightning network capacity grew by 150% in the past year. Source Kraken. So Bitcoin is indeed scaling. So with the markets as beaten down as they have been of late, the question is, how much further is there to go? Are we going to just see this drop off a cliff? Is Bitcoin going to follow? Or are we getting near a bottom? Are we getting near at least a local low so that we can have a significant relief rally? We are oversold. The SPX has fallen 2 standard deviations below trend. It's not quite 2020 or 2009, but it is the kind of oversold reading that we often see at the end of garden variety bear markets. So assuming this one is not super special, and a lot of people will be trying to say that it is super special, but assuming this is just your run-of-the-mill bear market, we have potentially come down enough. That's not to say the bottom's in, it's not to say there isn't more downside ahead, but it is to say that in the context of prior bear markets, this is certainly getting in the neighborhood for a low to form. Got here more context. How big is the bear? It certainly doesn't look like a cub. I'd say we're a medium-sized bear market. So far, this one ranks as the 8th least bad drawdown of 27 bear markets since 1871. This is great context. It's not super severe, but this is enough downside to say that if fundamental conditions or macro can improve even slightly, then it's reasonable to expect at least a significant relief rally, if not that we've already seen the low. So this chart shows us the S&P year-on-year change in grey and the breadth below in orange. If you don't know what breadth is the number of individual stocks taking part in the index's move. Okay, so at the moment, minus 46% is consistent with typical bear markets, but it does fall short of a once-in-a-kind career, nothing to lose signal produced in like 2020 or 2009. So again, we're not quite at the level where you can just YOLO in. However, we are at a level that if we measure it against all of the prior bear markets, we can say, you know what, this is in the right neighborhood for your average bear. Valuations have come down a lot. They were extreme up here. Okay, they were extreme. We were on a PE ratio of 28.7, 28 times the price relative to the earnings, and 23.4 on a forward PE. These have reset now to what is frankly reasonable, assuming we can get some macro improvements. And so, of course, the big question is with Bitcoin hitting its 200-week moving average, are you bearish, expecting a breakdown of this rising wedge? Or are you bullish, expecting a big bounce out of here to the high 6 figures? Not many people expecting this, I'll give you that, but you can't deny that if you look at the price relative to the 100 weekly moving average, we have dropped 50 odd %, and whenever we've done this before, although sometimes we've had to chop sideways for a bit rather than just V straight back up, we have indeed found our lows. Violating the prior all-time high was a big deal. However, if you are going to do that, this is the absolute best case scenario. You wick below it, but you don't close below it. On a closing basis, we're above. And now all of this comes down to this week. What is this week's candle going to do? We're not going to know till the end of this week. But if we can see a close hold above this high, this line in the sand here, then that is actually very bullish. That suggests that we are not just going to break straight down. However, if we close below this line on a weekly basis, then that certainly does open up a move down to this range, this 14k range, and nobody wants to see that, let's be honest. In the meantime, we've got tech divergence from the S&P. This is the Nasdaq in the candlesticks with the S&P up top in the orange. And you can see that the Nasdaq, it leads. The Nasdaq peaked first, it began a downtrend first. The S&P lagged behind with its peak and then lagged behind beginning its downtrend. The story today is something we haven't seen since November of 2021. And that is that the Nasdaq seems to be producing a higher low. It seems to be leading the recovery. I'm not saying this is a recovery yet, but I'm saying if we are going to form a recovery, this is what you'd want to see first. You'd want to see the Nasdaq leading and then the S&P to follow through. The Fed is apparently getting serious about fighting inflation with the 3rd rate hike since 1994. Back then, it took them 3 months to reverse course. What's the count going to be this time around? Well, if you've been watching the channel, 3 months takes us to where? September-ish? Where have I been saying the whole time we're likely going to get a pivot? I think even possibly before September, but I've got, as you'll see at the end of this video, I've got the September marked in that yellow vertical line on the S&P chart. I really think we're going to get it. Another reason why I think we're going to get it is fund manager cash levels are extremely high. We haven't seen fund managers holding this level of cash for 20 years. 20 years. And what do? When they get the pivot, which is what they're waiting for, let's be honest. Okay, why would you hold cash in an inflationary environment like this? Okay, you're not for the long term. They're not exiting to cash because cash is long term the right thing to hold. They're exiting to cash because they're sitting on the sidelines waiting for this pivot. And this is as high as it's ever been. Look, whenever the cash levels are high, if you know your market history, you know all of these dates coincide with the start of enormous bull runs. So is this time different? Probably not. Probably we're going to see maybe a slightly higher high on here, and then we get that Fed pivot, and you will see them deploy all of that cash, forcing the markets off the lows. Bitcoin spot ETF has been filed by Skybridge Capital. So this reminded me, for some reason this keeps slipping my mind. I think if you've been in the Bitcoin space long at all, if you've been in it more than a couple of years, then you know that people have been talking about spot ETFs for seemingly forever, and they always get quite hyped up and then they never really get approved. So I think that's why I just keep putting this out of my mind. But July 6th is the deadline for the SEC to make a decision on Grayscale's application to convert GBTC into a spot ETF. Grayscale have said that if this isn't approved and we don't get a spot ETF, they are going to sue the SEC. And now Skybridge is saying they're going to file for a spot ETF as well. A spot ETF would be a great thing because it is Bitcoin settled and therefore will have a direct impact on the price of Bitcoin. So for every time somebody buys a spot ETF, it will have to have a mirror transaction for an equal amount of Bitcoin over the spot exchange. But like I said, if you've been in the space for any length of time at all, you'll know not to get your hopes up too much on spot ETFs, as they have a long history of being declined. You can see that we're having this battle at 20k, and we're probably going to continue to do that for a while. We do have to be open to chopping sideways and then a little drop down, maybe to retest the lows. We have to be open to taking out the lows, and we have to be open to just sort of trending up and then dropping in. But ultimately, we know we're going to form a 60-day cycle low around this point, and when we do, that's when all eyes should be on Bitcoin, because how we react off of this low is absolutely critical. If we get a strong bounce off that, that's good, that's relief, and that gives us chance to lighten up if necessary, if we were overexposed up here, and it also gives us chance to take a nice swing trade. But if we get a small bounce out of here and it doesn't really do much, doesn't materialize into a big rally, then that is going to tell us, that's going to be our early warning sign that we are going much lower in the near term. Ethereum kind of similarly, it's back above 1,000, although barely, so it's probably going to do some more chop for a little while and just follow Bitcoin when Bitcoin hits that 60-day mark. The S&P I mentioned earlier, as well as the Fed pivot. The S&P is bouncing at the moment, but what's it doing? It's really doing not a lot of anything. I would be interested in taking longs here, so we can line another one of these up and sit and wait patiently. Something like this. I don't know where it would be at the moment. Something like this could be coming into play, but we don't know yet. So we'll line this up and we'll leave it. Of course, we've got our Fed pivot in September that we are hoping to see around that time. It could, of course, come before or after that. But ultimately, until we get a pivot from the Fed, then we're not going to unleash the bulls just yet. Nor are we going to unleash all of this capital sitting on the sidelines at funds. So if you were watching the prior videos, you'll know that I said that it'd be good to lose this level, and if we could be down here coming in to the end of the month, that would give the Fed some credibility in a pivot, because they could say, oh look, oil, which is a great measure of inflation, is coming off of its highs and is at a reasonable level, and therefore they could possibly justify stepping back on the tightening and the hawkish stance that they've got at the moment. Let's take a look at gold. What does gold want to do? It kind of looks to me like it wants to sweep these lows. Not as like a breakdown, but just as a like FU to all the traders that have stops down here. and then reverse on them. But ultimately, we're still inside this wedge. We're still doing kind of nothing apart from meandering towards this trend line. So are we going to get this? You could possibly argue, if we use the close from this, that we've got this trend line going on. So maybe that's the thing. Maybe we'll look to enter on this. But for now, I think it's safe to say that it's doing a whole lot of nothing, and we do want to be open to a possible sweep of these lows. Silver still hanging on, isn't it? Barely. But again, if gold's going to sweep the lows, then this is going to end up being a re-entry. There's nothing we can do apart from keep pushing this trade, so we'll continue to do that. Become interested in miners as and when gold can actually break out. And we'll end on a bit of dollar, behaving more or less as expected. Slight higher high, pulling back, approaching the parabola. And interestingly, we are approaching this 60-day low for Bitcoin. It's not far to wait now. Also, I've just realized, actually, after today's video, the 7th of July, that's the day after the deadline. So is this going to be the catalyst? Is this going to catalyze the bounce? If this gets approved on July 6th, then we could see this 7th of July date. I mean, this is plus or minus 10%, right? So we could form, say, 6 days either side of this. So that's really interesting. I've just noticed that. Are we going to see that then? Are we going to see the July 6th Bitcoin spot ETF approval? And is that going to open the floodgates for a bunch of sideline capital from the hedge funds to flow in? Wow. Drop a like if you're enjoying this content. We know the dollar's going to break down sooner or later, and I really think we're getting close. A lot of people are calling for it to break down here and stuff, and no, that was not one of our calls. I did think that possibly we would get rejected off of this, but we decided to do a little chop first. So I hope you enjoyed today's content. I hope you're doing well in life. Hope you got sunshine. I know I have. And in the meantime, make sure you're subscribed, follow me on Twitter, drop a like for today's content, and let's hope we get that spot Bitcoin ETF approval. So until next time, take care. All the best. Cheers.